What up, guys? Welcome to another week of fundamental analysis and trading review. Let's first just go through the trades taken this week. So I did take one trade on gold, and we did end up with a small win, 1.775 risk to reward. You can see the trade from a daily perspective here. We had a daily support, so 4 hour support zone as well. We entered on this candle here, stop loss under the lowest point on this zone, which was this candle here. You could see we held this trade for quite a while. It was held for around 12 days. Sort of rejected off here, came back down and pushed back up. I do believe after this initial push here, stop loss was moved to break even. You can see it went back up here. Still, stop loss was break even until it was pushed up here, and then the stop loss was moved very closely to this zone here. And we got taken out for 1.75 risk to reward. So this is another win. In terms of our trades thus far, we are doing pretty good. We have 2 trades, 2 wins. One was 1.5, the other was 1.75. In terms of how much it went, it did go up to around 4.38 risk to reward, but part of the game. It is what it is. We got taken out, and that's it. So very happy with this month's trading. It's been very mechanical in terms of from a technical point of view. From a fundamental point of view, that's what we're going to go through now. So popping up my slideshow, we have the 17th of June to the 23rd of June fundamental analysis. COT actually didn't come out. I don't know why. It's still on the 11th of June, so I can't really report on COT data. But let's just say from a previous COT point of view, we are, there's a bullish change or shift in oil. Gold's still very bullish. That's the main commodities we're looking at right now, and the USD obviously being no change there as well. Now in terms of fundamental data, so we actually had PMI, flash PMI news, we had retail sales, and we had unemployment claims, and flash services PMI was actually bullish on both services and manufacturing. So that is bearish for gold in terms of PMI, Purchasing Managers Index, being bullish means the economy is doing well, better than anticipated, and therefore conservative, safe haven sort of investments like gold, potentially Bitcoin, and other precious metals. That is a negative news for them, and the dollar becomes more attractive. So you can see gold was 5. There was a strength of 5 in gold, and now it's been reduced to 2. So, but we have removed the federal funds rates. We're just not going to use that anymore in our analysis. So it's actually reduced by 2, slightly more bearish. Now, in terms of from oil's perspective, oil was. It's actually bullish to have PMI numbers higher than expected. It means the economy is stimulated. It means oil must be used in some of the manufacturing, some of the the processes involved in the the services and manufacturing. So we had a slightly bullish turn for oil, and that paired with last week's COT data for oil, and we'll see from a technical point of view as well. Oil seems to be bullish in the interim, in the short term. It is overall negative, right, from all our data, but for the short term, oil does look to be quite bullish, and we might choose to pick up some long trades. Last week's data in terms of from for the fundamental news, we had Empire State Manufacturing Index, and we had Philly Fed Manufacturing Index, which was sort of counteracting. We had positive or hotter than expected on Empire State. We had cooler on Philly Fed. So I'd say that those two would just cancel out. And in regards to manufacturing index, it's basically, I believe it was a projection of from the region, so the Empire State region or the Philly region. It was a projection of things like um, inventory, costing, things like that involved in manufacturing. And so with regards to these two fundamental news, I will be delving a bit deeper into what it is and hopefully doing a PowerPoint presentation so that, number one, I can learn, but number two, you guys can learn with me. So obviously manufacturing is very important for the economy. It's actually involved, as I was doing my research, it's involved in around 70 to 80% of all trades. In the world, and trading is very important for a country. Their currency is being used, so that's just a little snippet of why manufacturing is important. Obviously it's to make profits as well, so we want to make sure our country's manufacturing is doing well. These two opposing readings, just I'd use it to cancel each other out. Now building permits slightly cooler, but you can see existing home sales slightly hotter. So again, I'd say those two cancel each other out. Core retail sales a bit cooler, so you would say overall negative for the USD, but because manufacturing and services PMI, which is quite a strong economic indicator, is so they're both hotter than expected, and it's actually manufacturing's been revised higher last month. It's very, very bullish for the dollar this week at least. Next week's data, I'm looking to see if FOMC, if Waller speaks of anything in terms of the economy. That might be something interesting. We got final GDP quarter on quarter, so I'm looking out for that. Unemployment claims is a weekly thing, so we'll pop that in. And even University of Michigan consumer statement and PCE numbers. So not stacked next week. The GDP I'm probably the most concerned of, and maybe PCE, but some good fundamental news next week. So take home is, the biggest thing was the strong PMI numbers suggesting strength in the US economy. Dollar becomes more attractive. Things like gold and Bitcoin and silver and platinum becomes less attractive, which is why gold on my trade had such a shift to the downside. It was pretty much a straight bear candle to the downside. However, economic activity is good for oil. Things are running and churning. We need oil. Visually picturing there's an engine churning, and we need oil to lubricate all the gears. So, very happy to set up for potential longs on oil. Will be sidelined for gold because I do have an overall bullish bias for gold. The time being, it seems to be counteracting my argument, so we'll be on the sidelines for gold. But oil does have an overall bullish, at least to the COT report, it has an overall bullish bias, despite bad economic news in the past. So I'm happy to trade oil to the long side. Now, if we just go to treasury rates, so 2-year treasury rates, this is last month, we can see there was a bit of a drop down. So drop down in terms of 2-year bonds, indicating uncertainty in the market, dollar being less attractive. But now we're starting to fizzle and sort of plateau. So does this mean that USD might come back up? And as such, if we get a strength in the dollar, if we still get stubborn inflation, does that mean rate cuts aren't going to be coming up soon? Does that mean we're still going to have high rates, which could actually be good for the stagflation concept in gold? So that might be a potential future long again on gold, but yeah, we'll see. In terms of oil, let's have a look at oil. So that's gold, that's done. I'm not taking another trade on gold for this week, but we can potentially trade oil. You can see in the last, look at that run here, 13% increase from the bottom here on oil. You can see it was choppy. There was an area here that was trying to clear off, and then it broke through to the downside. Alright, broke through the downside. We might have hoped for something like this. Violent, comes back up and back down, but no, that did not happen. So this area becomes negated. We might have expected some resistance here, but it actually shot through. So in terms of my potential setups for this week, I might look to yeah, that should be good. So I might look to do this. Here's what we're going to do. We are going to put a trade alert right here. Add alert. And we might wait for a 4-hour setup to tag us in here for a long to the upside, right? So if we can get there, if we can get, a candle B there, we can probably put stop loss just under that and look to trial that bad boy up. But yep, that's the only trade I'm looking for this week. Let's keep going. We've been doing good. We've had, in terms of the last couple trades we've had since switching to just strictly oil and gold. Let's open up my journal. Got to keep a journal of everything now. We literally had 2 wins on gold starting of this month. The account size dropped heaps, not so much from the losses, but just incorrect trades, higher than expected position sizes, just because of calculations and whatnot. So the fact that I'm trading just oil and gold now is actually a good thing. I can really put in just regular, I know that gold, my typical stop loss size on a 4-hour zone is around 0.02. I don't know if it's called pips, but just the position size, and then I'll find out what oil is as well, and at least we know when placing trades we should be roughly around that area for our stop loss. So yeah, very happy with this week. Let's keep going.